Well, good evening there, traders. Thanks for joining me. This is a market update valid through to the close of trading, which was Wednesday, the 16th of April, 2014. What I'm going to do for you in this video is take a look at the Dow Jones, the S&P, and also the Nasdaq, and then get into our top 12 individual trade analysis. Before we do that, let me just bring up my pen tool just so I can illustrate this video presentation for you. It's just loading. Just give it a couple of seconds. There we go, it's all up and ready to go. So what we've seen this week for the first three trading sessions, moving into the last being Thursday, is quite a bullish market. You can see we were right on the edge of a potential breakdown on the Dow Jones Industrial Average. We had the trade set up around 16,004 to trade down to 15,796. That didn't eventuate. Instead, we've seen three quite bullish candlestick signals. And what's really happened is that we're just simply trading back up into this old resistance level up here about 16,500. We're a couple points away. I do think we will hit that most likely on Thursday's trading session as we transition into the long weekend, which we call Easter. So really what was looking quite bearish moving into this week is actually quite reversed, and we're still at the end of the day stuck within this range bound market. You can see we're simply in between support and resistance right here at 16,500 and also 16,100. Nothing really to report about other than the fact that you need to remain neutral at the moment, especially looking at the Dow Jones Industrial Average. We will break out either above these old swing highs and old resistance levels, or we will in fact eventually break down below these old swing lows and support levels. It's just a matter of time. Until then, remain patient. I wouldn't be getting overly bullish or bearish until we break above those two listed trigger points. Looking at the S&P, you can see we had a little bit of a whipsaw, which is quite interesting. We did break all of the exponentials, which is good to see. We also did break the 100. However, that was only for really a period of 2 days, and since then we've just bounced. You can see we're bouncing off that 100, breaking above old resistance, which did act as old support. So this is quite interesting. A lot of the signals and technical signals at the moment are very convoluted, are very bifurcated. They're sort of dismissing one another, and they're not really leaving us with a clear directional sort of price direction in which price wants to move. So at the moment, when you get these signals, it's best just to stay out of the market, enjoy your long weekend, get away from the markets, and just come back next week refreshed. If we take a look at the Nasdaq, also you can see, let me just get this into perspective. We did have this breakdown trigger here about 4,070 or 4,068 with our first target down here about 3,975. Yes, that trade did play out. That is all well and good. But really since then, if you look at the candlesticks, you've seen a couple of shooting star candlesticks, a high wave spinning top, and also a doji candlestick. This is really reflecting indecision and the potential for a bottom, or at least a short-term reversal back up into these exponential moving averages. So I wouldn't get carried away. This isn't the type of market to be looking at bullish trades, especially when we're making a series of lower highs and lower lows across really all three of the markets at the moment, or if not, just stagnating and continuing in that sideways market move. If we take a look at individual trade and what it means for the, I guess the implications of individual trades, really what we need to contend with is earnings. So if you're looking for positions in the way of swing trades, it's not really the type of environment for you. Apple, you can see earnings is coming up the beginning of next week. Amazon, exactly the same. AXP, believed reported earnings today, so you will see a gap most likely tomorrow morning. Baidu, again, this is a really nice bi-directional trade set up 168 and 139 on the bearish side. Caterpillar, again, earnings next week, very, very close. We're at our ultimate target. FAS, again, isn't a share, it's really just a financial ETF, but not a whole lot to report about there. Google, again, earnings announcement, I do believe, has been released. See what happens when that gets factored into the market. HD sitting at support. This is exactly what we want. We're starting to build a little bit of structure, some lower wicks, some upper wicks. We're just going to see what actually occurs with HD. JPM breaking down. You can see this open window, looking for a continuation trade down to support down here, about $54 a share. This old swing low support here. Netflix, again, hanging out at the bottom of this closed window. You can see a little bit of a false break. No trade set up. Earnings is coming up next week. Leave it alone. Same with Starbucks. Again, you can see all of these vertical lines, which is really telling us to not get involved one way or another. And then finally, to end with, we've got XOM again, looking at that earnings announcement. So just to summarize, markets, again, mixed signals, no clear directional movement. it does appear that we are getting some bullish momentum, especially with this lower wick, which was made on Tuesday. However, having said that, it's not enough to be actually getting into bullish trades at the moment, especially when a lot of bullish trades aren't really set up. It looks more of a bounce, all right, which is being reflected a little bit differently in the overall market indices. So thanks a lot for watching this video. Give it a thumbs up, give it a like, give it a share. If not, subscribe to our channel, and have a look at our free scholarship, which we're giving away on our website homepage at pivotpoint-trading.com. All the best, ladies and gentlemen. Have a fantastic long weekend. I'll see you next week for another week of trading. Goodbye.